This is Eric Muathe with Muathe.com. I'm back again, and it is the August 26, 2009, and we are going to take a look at some of the things I am looking at beyond the normal video on the main site. So I have a mentorship video for you guys here, and I'm going to discuss into depth some of the things. It's not going to be a very long video. I have a date with my cousin, lunch date, in about half an hour, 40 minutes or so. So I have to kind of, I won't make it long for that reason. But what I'm looking at is to explain to you what's going on. We have a couple of days before the month turns, and that's going to be an opportune time for the market to change its energy, should it choose to. It's going to be an opportune time. But let's take a look at a random instrument here. Actually not random, it actually is very predictive. If you take a look at lumber, and it's directly tied to home construction and business, residential construction, commercial construction. So the price of lumber can be very predictive, and if we take a look at what happened to it last year, as we began the year, you see it broke here, broke right there, and the market did start the actual sell-off in January. It started on December 26th to the day 26th, and this instrument did also break. And also before the crash of last year, let's just say if you are watching this instrument, you notice it broke this upward trend. So there was a break there. Crash happened right here, September, October, somewhere around there. So it does have some kind of predictive value. You can't just discard it. So we are coming into the new market environment. We've been in this tight monthly wedge. And as of yesterday's close, I don't know where it's closing at. This is end of day data. You see it's breaking that trend right there. So there's a break in that chart. And more importantly, based on the work that you and I do, is we have this uniformity. You see, we broke down right here last September. Bam! And that corresponds with this break here. So the market is telling us the RSI break below this price range here is critical, and was critical at the time because you notice there was uniformity above the red line, right? And we came back many months later, and we've tried to move above this red line, could not, orange line, and now we are rolling over, and that's a sell signal. In fact, a very serious violation. Okay, and also if you take this is all-time monthly closing low for this instrument. This instrument alone, it has its own energy, its own internal dynamics, and it's about, or actually we can say is already broken this. Every time you have a significant low on the RSI, which corresponds to a significant low, especially an all-time low, any break of support, RSI support, is serious. Consequently, you do see lower prices, and basically, even when you compare it to the S&P, it's breaking that. Comparatively to the S&P, it's breaking down, and the MACD is showing some kind of crude looking, and I hate using this, but I'll use it anyway. Left shoulder, right shoulder, and a head. You got your mouth right there. So head and shoulders on the MACD long term. So think about it. This is a monthly chart, and it's giving you some kind of a crude looking long term head and shoulders formation. Like I said, I don't like using that head and shoulders, but what it's suggesting to you and I is that there is a long term implication in this market. Possibility of lower prices might be way beyond our thinking and might last longer than anybody could comprehend. and we will see how that plays out. Take a look at the weekly. Again, you see the same, this dotted red line right here, this break July of 07 corresponds with this RSI break, and that fell. So we have this break and this break here. So we take that line and we use that every time we have uniform activity above and back below this line. You sell there, and now there, and that corresponds to the crash. It's important to understand the crash surprised a lot of people, but what we are discussing here is so consistent. It keeps to be showing up and could have warned us of an impending market move lower last year. I didn't miss it, but then again you see the same thing showing up here. So now we are back again and we are crashing, and these lows here correspond with these RSI lows, and now we are breaking that. So that cannot be good. Absolutely no way can that be good. And at the time when you make such observations, your mind cannot see how that can be of any value until you start seeing prices reflect that. And when they do, it's fast. It's really a shock. In fact, you get scared sometimes. And also we have this MACD break. This MACD is about to break and about to move back below this zero line, which is all in all not very strong indication of where this market would want to go. This one is breaking down, and also the moving averages right here, as they roll over and bust through this line here, just like if I can show you just an example, like right here, when the moving averages come and break those support levels, that's not good. And then also notice this is one of the many instruments that is now we are starting to see another cross between the 13-week and the 34-week moving average, only that this time the cross seems to be to the downside like that. So we have to be open to just lower prices. I mean, I don't know how. I don't see anything bullish. And this is the daily. The daily showing is trying to find support. We have a flat 200-day moving average right there. We'll see how that resolves. But I think the monthly chart is pretty much telling us where that could resolve. So we obviously have to play short or defensive, especially in the real estate complex. If you take consideration of the S&P 500, and this is almost a 30-year. This is wrong right here. I should get rid of that as soon as first chance I get. It's a multiple year monthly chart, and what we this gray line here has been support 91, 95. We came back and tested it multiple times in the 90s, in the early 2000s. Multiple times market would drop, touch it, and bounce. We broke below it and crashed last year. We've walked all the way back and are back testing that line right now. And also this happens to be an area where we have this price channel top line. So there's some kind of resistance somewhere here. Okay. And then one thing to note is this is the one thing that I just waiting for it to happen, waiting. But it is this phenomena where we broke down here last year, right there, break, okay? And so we've worked our way back. Now, if we eventually roll over and break this line here, corresponds to a multiple lows on the market. If we roll over, number one, break that red line, which is support line, that's sell signal, and then we come back and have uniformity above the blue line here, which is where we broke down So we are back in the hospital. We are not feeling well again. Our condition has come back and we just have to be readmitted. That right there is going to be another sell. And maybe that's the market just taking its time, but eventually rollover is potentially around the corner and could come at any point. When it does, it's going to be a huge psychological deflating to those who are seeing the market moving higher, because once that energy flips around, it's going to be very, very powerful. Just like this move high has been so strong, the next move, once the energy flips around, it's going to be strong. Take a look at the ERY, and I want to spend a minute on this chart. The ERY, for starters, we have this is where this move right here, from here to here, it started right here. There's a wedge, and then we broke out right there, and we moved from around 16 all the way to under 30. Okay, I mean, that's a good move. That's probably 80, 70, 90% in under a month. All right, not bad. So that move began, so we can say this is where things got really good for this instrument. So we draw a line right there, the blue line, and every time we move above it, you get a little pop. We came back, tested it, little pop right there. Now we are back, and you see we are increasingly making higher, getting stronger and stronger. This patient is getting stronger and stronger. All right, so as the prices, so we have positive divergence, and this is important because I want to spend a minute here and explain something. So we have positive divergence right here, improving technicals, deteriorating prices, and usually the resolution to the upside. But that's not what I want to spend time on. Is the duration, the length of that move from here to here is just about a month, just about 3 weeks. Give it a month, 3 weeks. So that might be predicting that the next intermediate low in the market, intermediate. So just keep that in mind. The next intermediate low in the market might be 3 weeks out. And I was looking at that, might be about the week of options expiration, week of September the 14th. It might be a short-term low in the market. And that's based on this, the length of this positive divergence. Now, why is that significant? It is significant because as where is that? There's an example I was going to show you. Even if you take, I hope I get this right, because I'm trying to remember, maybe I have the wrong chart, but the length of this move here, right, you can say market try to make new lows here, and yet the technicals were improving. So we can say positive divergence. PS that, so made a lower low, technicals improved, and that also lasted about a month and 2 weeks, so about 6 weeks. The rally, the next rally, moved it from here to here, and if you consider this high right here, the red bar, you get about a month to 5 weeks. Okay, it's not a perfect science, but it's an approximation. And again, you'll see this move from here to this low, intermediate low, again also took about, let me see that, about 3 weeks, give or take. But I think what was more important is when I was doing some work last night, this move from here to here is about, again, another 6 weeks, which corresponds to this move here, right here. And that corresponded, this break lasted, the intermediate low was made about, see, this is a month and this is another half month. 6 weeks later, so this was about 6 weeks in length, this area right here. And that once was broken, the market went down, this instrument went down for another 6 weeks. So there's some predictive value, that's what I'm trying to say. It's not a perfect science, but it just gets you close. Again, take a look at, you had a month rally that lasted about, on this instrument, about a month. From here to here is about a month, and the next, so corresponds to this here to here, and the next intermediate low was about a month later, right here, and intermediate low somewhere around there. So it's not perfect, but it gives you some sense where you might consider taking profit, especially if you see instruments deteriorating. But for now, most important is 3 times testing this line, increasingly getting higher and higher above this blue line. This is an instrument that wants to rally, so we have to keep that in mind. And this is a DPK, and it's a low volume instrument, and sometimes they have cleaner charts because they're not as volatile. But what I wanted to point out here is how markets behave and how it's odd. And truly, I don't think anybody is. I'm sure there's a lot of manipulation, but that's just we say it's manipulation, but really it's not. But you see this triple top 1, 2, 3 corresponds with this triple top here 1, 2, 3, and then followed by this right here. So this really is this action is duplicated on the next low. So this high was duplicated on the next low. It's the same thing in reverse. Okay, and it's only that this here was shorter time frame, this here was a longer time frame, but it's the same thing. It really is. And I think this again ties down to the duration. More importantly is as it and I hope I'm not mixing myself here, but this positive divergence right here, improving technicals, new lows, as this thing resolves, you see again it's about 3 weeks in the making. 3 weeks in the making here. So we start seeing that the next intermediate high, it's an intermediate, maybe where the market sells off, and then market sells off and tries to bounce from intermediate lows about 3 weeks or to a month from now. This is initial, it's a small bounce, and then, but I think the move in the market is going to last longer until I see something different. And the reason being that the formations the market is forming is has long-term implications. We take a look at copper. Copper had made a new nice high, and then recently it broke down right there. Corresponds with this break right there. So what we've done in effect is we've come all the way. See whether I can come all the way back. We broke there. We've come all the way back and are testing that break, and we have this uniform, cannot move above so that's a sell signal. Okay, on as far as copper is concerned, and copper is a big barometer gauge on the health of the world markets, and I talked about this in the main video for the subscriber base. And we see here back to 61% retracement of this sell-off and back. There's scientific resistance there, especially when you see it stalling. That's confirmation. And more importantly is this break, this huge break in copper, huge break. Now, and I bet you, it goes without saying that there were people in this instrument here who were either long or short, and they had to wait 1, 2, 3, 4, almost 6 weeks, 6 months before this thing came out of this basing period. So we all want to make money. I do, you do, and the next guy does. Everybody does. In the market, we all wake up wanting to make money. But the reality is that there are moments, and maybe even long moments, when the market does nothing, and we internally get frustrated and we fight and all these things. But we really have to check that, because it's unrealistic, because it seems like the market in truth just does its own thing at its own time. But this break in copper is what I want to focus on. This break right here on the monthly, very huge, because that was big time worldwide financial mess, and it corresponds with this break right there. So we know that once this blue line was broken, right, So we come back and back test, and we are trying to get out of hospital here, and we cannot. It's not going to happen. And so what we are going to end up having is uniformity around this line here, and that's a turn point in the market. You got to stay short. There is no other way to play that scenario. Because what's telling you is that also you'll notice it's going to be breaking, and that's a cardinal break. The cardinal, we don't want to do that. Breaking this trend line, and it's based on a multi-year low. That's a serious break when that's broken. USL, this is a ETF that tracks the energy space. And again, one thing I talked about this briefly, but did not go into detail for obvious reasons, because you guys are paying for it. And the thing about it is, right here, you see, we broke down. This is initial break, right there. And we've come all the way back and trying to make new highs above that. Have not been successful. More importantly is the RSI interpretation. So right there is where we got sick. We've come all the way back, and now we have a double top. The reason why I think this market is really in trouble is when you have a single top, that's okay. You know, you might rally eventually. But when you start forming double tops and things like that, the implications are longer term. In other words, now you're extending the drop. Okay, you are confirming it twice, so now you're extending the duration and the intensity of the drop if it's a double top. So this double top on this line here, this is a hospital though, and you cannot, you're back, being forced back in here. That's a serious break, especially when you break the 50 and also break the red line, which is all-time lows on this instrument. And it will not surprise me to see crude oil trading in the 20s, if not in the below 20. It can happen, because the last time crude oil made a low, intermediate low, was around 33, 34, in the lower 30s. Those are gonna be busted, as far as I can tell. Really, I mean, and I, you know, I'm objective. I'm just saying what I see. Okay. Now let's take a look at UYM. And UYM is, let's take this break right here in July 08. This break, bam, right, corresponds with this break right there, right, June, right there, break, that corresponds with this break right here. We cannot argue with it. That's the market telling us this psychological level is significant. We've come all the way back after what, 1 year, 14 months, and not only did we find resistance at this level, we are forming a double top. Guys, we just had this discussion and we are forming a double top. The implication is that this is a long term coming. And just like we had a double, actually a triple, see, we had a double top here, markets fell, but more importantly, we had a double top even here, with followed by another confirmation. So even if, let's just say, market decide to do one of that, still, this is not bullish in any event. This can't maintain you. It's just not good. The retail sector, again, trying to break out, which is encouraged when you consider only the price. Problem is we are back testing this line here, which is where we broke down late 2007, which is right here, a break of this trend line. Get that straight. There, we broke down there, and we fell hard, crashed in 2008, and that corresponds with this break right there. So now we are coming back, draw a line there, vertical line, horizontal line, and so we can't move above that. So now let's just assume even if we stay above this price RSI level for the month of August 2009, whenever we roll over and we have something like that, which also corresponds with a break of this multi-year support line right there, serious break, serious break. Take a look at SMH, semiconductors, price channel weekly, trying to find breakout strength, struggling, but more importantly is this, follow this line right here. This dotted line is where we broke down mid 2007. We broke down right there, and we used the RSI interpretation. That's the break right there. So that is primary resistance, primary resistance. So we've come all the way back, and not only can we not move above that, we have uniform, very uniform looking double top. I mean, it is very constructive. It's something like this. And remember, uniformity is key in the market. Another level of uniformity is that once we hit this high right here, we've come back, and that's why I started turning bearish, is because I saw resistance there, but the market came back and is doing a double take. Of course, I did not see that coming. I saw the first resistance and I responded to it. That's the only thing you can do in the market, is respond on the facts on the ground. We've come all the way back, and this is uniform. You can see how uniform this area is. The retest, very nice, uniform action. And if that can't hold, the resolution is to the downside, which would correspond with a break of this line here, which would eventually correspond with a break of this multi-year lows there break. And that's going to be a serious break. It really is going to be a serious break. MACD again. See, I can talk about the MACD here. See, this MACD is based on an all-time low right here. All-time low, or I mean multi-year lows, multi-year lows. When we come back and break this line, that's a serious sell-off. And you can even tell, because even see this short-term, if you take this break right there, which is beginning of April, that little break, not much. Another break in June, mid-June, right there. Those little breaks based on this all multi-year lows correspond with this pullback here, right here, and this other pullback here. So those two breaks on the short-term MACD were not very bullish. So now let's take a look at it from a monthly view, and I talked about this on my uniformity video. Is right here, cannot move above this line where it stalled. It was support for multiple years. Once we broke that, we crashed. Very important to remember, that was a serious crash, and now we are coming back testing it. Have never had the strength to move above that. It might now you start seeing why I've been bullish for about a month, and it's not because it is based on air. It's based on the facts on the ground. The market's just taken the whole month to resist that level, and it is what it is. So again, that corresponds with back testing this break here, which corresponds with this break here, right? So once we have this uniformity here, corresponds with this highs there. Okay, remember this is a monthly chart. So it might seem like quick, but it takes a while. This is a whole month. This red candle, this red month right there. Let me take that off. This red month where there was resistance, it took the whole month, pretty much, for that resistance. If you for that resistance to be confirmed. But eventually you are paid, because we had the crash of 2008. It takes a while on the, we get frustrated, but there's no point for that. Brazilian market, again, this is now we go to the daily. Again, what you see here is this is the break. That's where we broke down. That's your tell that things are not looking good. We've come all the way and back testing this line here, but that break corresponds with this break here, right there. That's why you have this pink line, and we come back, and you see that the key here is uniformity. You see that uniformity right there, back above the line and back below. That's a sell signal. That is based on yesterday's close. As of today's close, if you take the ETF, because the other one is end of day data, this is now current, you see we are down again after resisting this breakout here. Could not hold it, but see again, uniformity comes into play. We broke down there, the gray line. We've come all the way back, and through uniform action cannot move above the line. That's typically a sell signal, okay? And you can't respond by being bullish when you see that. The French market, again, this dotted line here corresponds with this. This is when the sell-off started, so we can see that's primary resistance. That's what the market is telling you. Once this was broken, so that level is critical to this market. We haven't closed for the week, but if other markets cannot move higher, it only makes sense that at some point this week, before this week is over, or some point beginning of next week, we have uniform action that brings it back below the line, and that's going to be your initial sell signal on the French market. The Kospi, the same thing, has had a nice monthly move right here, higher, and still trying to make new highs. Actually closed at new, I think 14-week or, well, wait a minute, 1 year highs, I believe. But you're seeing it's just a hair above this line here, the turquoise color line, which corresponds with this break right here. That break, the balloon busted right there, and so that's back testing this area. And once we have uniformity confirmed at some point like that, that's gonna be even further confirmation that markets needs to go down. The Kospi based on a daily, same thing. We broke down here. That's your initial weakness. Markets move back, but there's no strength. You break down around there. That was the initial break. You've come all the way back. You're back testing this area. Probably even form a double top. In other words, let's say the break, you broke down there on the RSI. You come and do this double top instead of having a single resistance. Once you back off that and you have this uniformity, double resistance, that has longer term implication. In other words, what you're saying is you have the move is gonna last longer as opposed to only a short. Just like you had double bottom here, instead of one single bottom, you had a double bottom here. Let me take that off so you can see it. The implications were longer term. And by the way, the length of this rally right here, this here to this here, is about 1, 2, 3, about 4 months. And so you take the next intermediate high should be about 4 months intermediate, and so we go 1, 2, 3, 4. You have an intermediate high and a pullback. So you can use positive divergence, but there was no positive divergence on this one because prices went higher and so did the technicals. But whenever you find positive divergence or negative divergence, you can use it to narrowly gauge time frame for the next move. The Chinese market, again, important thing is this break, this orange line was a break right there, and I've drawn a blue line which is a horizontal line, and we are either trying to form a double top. The week is not over, but it seems we already have our initial uniformity above this line and back here. So, and then again, that also happens to be an area of top line resistance right there. So, because resistance doesn't have to be like bang, bang. You can have resistance that looks similar but the same, like does that. And back. So you try to break out and then you collapse. So as you move back below this resistance line, that's even worse. That's exactly what the Japanese market did right there. So lots of weakness. And the MACDs, based on this low, this is a 25-year low right here. Any break of this line is going to be a serious sell-off or stampede to get out. Again, same thing. We are now making new highs, but the RSI is weak. And you can see this is initial weakness comes right there. So we draw a line. So any kind of move there that backs off is a sell signal. Trying to hurry here so I can move on with my stuff. Then this is Apple computers again. The red line here corresponds with this break. Right there corresponds with that break, and also corresponds with this break right here, which is initial break. But that line is where Apple computers cannot move about. I I didn't make it stop there. It just stalled there on itself. So it is what it is. So it's stalling right there, and if it rolls over and confirms that, that's a short right there. Okay, and that's gonna correspond. Okay, so this both red lines. This is an initial break right here, and this secondary break corresponds to initial break. Hold on, let me get that. Initial break corresponds with that break there, and the secondary break right there. This was initial weakness, and then confirmation weakness, and that corresponds with this RSI break of this initial black line, and then secondary break, which can also be said to be this break right. No, hold on a second. This break that corresponds with that low right there. Okay, so now we are coming and we are trying to move above that. More than likely we are going to have uniform action. That's a sell signal. Again, Apple from a weekly. See this break, this red line, this red arrow corresponds with this break right here that took it from 180 all the way to under 120. Corresponds with that RSI break right there. And so if you take that as primary, that was initial weakness, late 2007, early 2008. If you draw a line, and I've drawn one for you, if Apple eventually rolls over, and that seems to be the case, and we have uniformity above that line and below, then that's, as it moves below that line, that's going to be a sell signal. Citigroup, again, breaking resistance. I mean, if it breaks this line, and I'm stretching, the video is pretty much about the lumber and what it's predicting, but again, Citigroup seems toppy to me. A break of this blue line might start a nice sell-off on that stock. Bank of America is forming a nice wedge right here, wedging right there, and if it resolves to the downside, that's going to be initial fresh sell signal. Well, that's it. This is Eric Muathe with Muathe.com. I'll keep you guys posted, but as you know, we are committed to the downside. I think what you need to open yourselves to is the idea, the possibility, the potential that this market might go down farther and last longer than we think right now. And if the conditions change on the ground down the road, then we'll change our stripes. Eric Muathe, thank you for your business. Be patient, see what happens here. Peace and blessings.